Hey traders, Shane from GMT Futures. Welcome back to our training session. What I want to do is take you through today why the cycle trader is so effective. And what we're going to have a look at basically is we're going to have a look at the cycle trader, how it works, and we're going to have a look at the work that we've done on the Euro futures for testing up and creating a high performance cycle trader strategy. So I'm going to show you how we've been able to use the cycle trader to get the most out of the Euro futures over. We've actually had a pretty big week as far as training goes, so we're going to continue on today with looking at our systems and obviously doing some work in relation to developing up our high performance systems. So if I can just get a very quick acknowledgement that the volume's coming through okay, and you can see the screen that I have up. Now I've got the S&P up here at the moment. I'm going to do a quick review of yesterday's session, and then we'll be underway. So let's jump in and see where we got to yesterday. So for those of you who weren't with us in yesterday's training, what our mandate was yesterday was to look at the cycle and trend system and develop up a multi-system strategy. So what we ended up with was looking at the cycle trader on the Euro futures, and we eventually got a strategy that I believe is pretty good. It's we'll go through the stats here. Here's a quick snapshot of the equity curve. So we were able to basically put this together yesterday, and we did a little bit of prep work on it the day before. But basically, it's the cycle trader. It's trading on the Euro futures. It trades multiple time frames. So there's an advantage in that, obviously, it's not just trading one specific time frame during the day. Now, I'm going to go through the numbers here, the stats, as far as the system, and then I'm going to ask you a couple of quick questions. So remember, the idea of the training room is that you're participating and trying to answer all or any of the questions that you can. So I'll give you enough time to obviously put a response down. But basically, if we have a look at the stats here on this system, we've got an overall profit over 6 months of about almost $12,000. Our number of trades is 215. Our win rate is 64%. Average trade net profit $54. And if we scale down here to our max drawdown, which is one of the things that we look at as far as max drawdown to net profit, it's $1,000. So all up, this system looks really fairly solid. If we have a look at the periodic returns, which are our month returns, you can see that it's very consistently making money every month. The April's been a little bit of an anomaly there with it negative 212, but it's only early days in April yet, so we've still got a chance to rebound from that. Now, the other thing that I'm going to say about this strategy is that, and this will be set up as system number 1 on the cycle, because this is our new cycle trader strategy. The other thing I was going to say too here was that when I went through the cycle trader strategy yesterday, it was good. It was a good opportunity for me to explain exactly how the cycle trader works. So I'm going to do a quick refresher here in a second. But what I want to ask, a couple of questions I want to ask. Firstly, is that if we are trading multiple timeframes, which we are on this strategy, so if I go into the format strategies, and you can see that I've loaded up, there's 4 cycle trader strategies loaded up here, and they're all running different timeframes. So we found from our analysis that when I put the initial data into our spreadsheet, because what we did is we didn't actually start with this equity graph. This is what we ended up with. Our actual equity graph before we started looked more like this. I'll show you what it looked like. Let's go to the Euro cycle pilot system. So not that one, but that's pretty much what our equity graph looked like. A lot of trades. It's profitable. It looks like it's okay as far as profit. But if we have a look at the actual overall stats, we've got a drawdown of 2,500 or 2.6, and the thing with this is also that have a look at the average trade net profit. What can you see? Obviously, there the issue is with the average trade net profit on that strategy. Yeah, it's way too low. It's not high enough at all. So remember from our benchmark stats that we need to see, now our benchmark for average trade net profit on the cycle trader is between $30 or higher, or is $30 or higher. On any other momentum system trend, anything that's got any potential that requires any type of trending or a momentum-based strategy, we want that to be $50 or higher. Because we've got to remember that the cycle trader is really capitalizing on consolidation in the market. So let's go back and just have a very, very quick recap of what it is that we're looking for when we're going through our cycle trader strategy, and why it is that it's important for us to basically see exactly how this works as far as entries. So now the first question I'm going to ask you, what type of conditions have we got here in the market at the moment that we're looking at on our screen? Have we got a trending? Do we look as though we've got a strong trend here, or is it more of a consolidation and a range type condition? Yeah, so it's a ranging market. That's it. So obviously, if we look at the systems that we have available to us, the ideal strategy for these type of conditions is the cycle trader. That's ideal for us to be looking at that. Now, if we use the cycle trader as our strategy that we're going to be capitalizing on a ranging market, because what's one of the stats that we know in relation to trend versus range or consolidation? What's the percentage of time that we have in the market where the market's trending? So if we were to put a percentage value on the time that, so it's about 80-20 as far as range versus trend. So fantastic. So what we want to do is we want to be able to use the cycle trader to take advantage of that 80% of the time where the market is potentially consolidating. So what I want to do is just explain how the cycle trader works, because there was a little bit of confusion yesterday. I'll go over it again today just very quickly, and then we can utilize that to develop up, because yesterday we looked at the Euro futures, we looked at the Euro US dollar very briefly. I'm going to touch on that again today, and we're also going to have a look at the S&P. So we're going to be looking at 3 different markets today. So for our cycle trader really is very simple. I believe that the simpler the strategy, the better. The more complex you have the strategy, the more moving parts you've got to it, the more chance you've got of things obviously or potentially going wrong, and the more optimized the strategy can become to the market conditions. So we've got to be a little bit careful of that. So let's have a look at how the cycle trader works. Now, the cycle trader pretty much is based on buying support and selling resistance when the market consolidates. So how do we know when we're in a consolidating market? Well, if we get a breakout of these conditions here, so our dynamic support resistance and our cyan or white candles are printing, then we're starting to kind of get into a potential trend. So this cycle trader will only really work or engage when the market is not trending. So it hasn't got those larger moves of cyan and the white candles. So you can see here that very clearly, when the market consolidates, we start to get opportunities to take trades. So the way that it works is that when our dynamic resistance prints, which is our red bar, it will look for an entry point. Now the entry point is either going to be a break of resistance, a price area before resistance, or it'll be a value based on the first print or second print of the price bar. So let's go through each one of those. So if we decided that, all right, well, I'm only going to get into trades if my price breaks this area here, breaks above the resistance. Now, if we look at each one of these potential trade opportunities, we can see that we would, if we allowed, say, a 1 point break above resistance and a 1 point break below support, we would only get a couple of trades here. We would obviously get this trade here. We wouldn't get a trade here because we don't break support. We would get a trade here. we would also get a trade here. We wouldn't get one here. We would here. We wouldn't get one here. So we're almost missing every second trade. Now, that's okay, but what you're doing is you're limiting the number of trades you're getting based on the conditions you've got, because we're expecting that there's going to be consolidation. So there may not be enough momentum or enough energy for price to break these support resistance lines. So if we have an offset where we are required to break support resistance, we're potentially going to get less trades. Would you agree with that? We're going to get less trades. They're not necessarily going to be higher probability setups, but we are definitely going to get less trades, because remember that at some point you are going to break out, so that's going to be a losing trade. Now if we go into our strategy, and Mark makes a good point here, is that the original entry, that's exactly the way we initially set this system up. Here's our original entry. The original entry was set up right, well, I'm going to only take trades where I break this support resistance by, say, 1. And you'll see how this changes. So we'll go OK, and we'll change that to false. Because what that's going to do to my results is it's basically going to mean that I get very few trades through this area here. Because see how we drop a number of our trades out? It's only taking trades that break support resistance. So it really limits the number of trades we can potentially take. And although it does obviously cut down the number of trades, it still gives us a profitable equity curve. So that version obviously works. Now let's continue on with our plan here. So let's now go to the next option, which is basically, instead of us breaking support or resistance by a point, let's put it as a positive value of 2. So what does that mean? What does that mean for us for our entry? How have we changed our entry there? Because remember, a negative value has us sitting above on support and below on resistance. So what does that actually mean now for our strategy? It means that we're only going to get trades taken that are setting up before, that don't actually touch the support resistance, but get us in a couple of points before that print of support or resistance. So unless you get a print of support and resistance, you're not going to get the trade in. So let's go in here and we'll do a format. So that's on the approach. That's exactly right. So it's trades that are approaching support resistance. So now if we say, right, well, we're missing out on way too many trades with this type of setup. How about we do this? How about we go back to our original, or not our original, but our new version, and we say that we're going to take every single trade that prints support and resistance, and we're going to go in on the very first support resistance print. So if you have a look here, every time support resistance prints, you're going in on the very next price bar. So regardless of what happens, it doesn't matter where that price bar closes, you're in. So that means that you're really not missing any trades whatsoever. And you're getting in there. That's got a trend, so that's not going to take a trade. But every time there's no trend, it'll basically take the trade setup for you. So you can see there that it's doing a good job of capturing all the trades, or most of the trades. And then we can say, right, well, I like that, but look, Shane, I want to modify this slightly. I want to have a entry on the second entry. So the second entry dot. So then we go true, and that'll get us in on the second entry dot, and that allows us to have a little bit more flexibility. It makes sure that we've got a confirmation of the setup. I'll have to have a look at that, mate. There may be a filter on this one. Let me just double check. So the only reason why it wouldn't be taking a trade was the only time it wouldn't take a trade was if it lost the support resistance, or it got a cyan or a white candle. So if it changes color, that sequence will stop straight away. Because remember that once it goes cyan or white, we've got a potential trend setting up. So that will cut the sequence of long and shorts that are in play for the cycle trader. So resistance bar on the right. Yeah, what's happened here is I've said, right, well, once we've got a trend trade set up, I'm only going to take a trade on the second sequence of support resistance. So I'm not taking the first support resistance, I'm taking the second one. So if we go into the strategy, on the first support resistance, so no trend first entry, no trend second entry. So what that effectively means is that it's also saying that you're taking trades based on, say we've got so this is our trend. So we've got a trend established there. Then we get our next support resistance print, and this would be basically our first. That would be our first potential entry. Would everybody agree with that? First entry option. So that means that we've broken our color. There's our first entry, and this now becomes our second entry. Second entry. So that's where we would take the trade. Now, what happens is that once we get a break of the trend, of that sequence, we then reset. So we've got a trend established, so we can't take the first entry. So that's first entry. But second entry we can take, because we're wanting to make sure that we've actually got a confirmation of a cycle type activity. Then what happens here is we get a kind of a trend set up here, so we can't take that one there. So there's the second entry that takes a short. Then you've got your first cycle there, then you've got your second there. So you've actually got your cyan and white here, which break the sequence. So that breaks the sequence of trades. So if we go back and we say, right, well, second entry isn't getting me many options, let's change this to a first entry, because I want to be more dynamic on the cycle. I don't want to wait for, two dynamic support resistance to print before I get into the trade. I want to go in a little bit more aggressively. So now what should happen is it should take a trade on every first entry, as you can see there. So first entry gets taken. Hey traders, thank you for joining us as part of our video presentation. If you'd like to become a GMT Futures FX automated system trader, very simply all you need to do is go to our website, news.gmtfutures.com, have a look at our product shop, and you'll see our systems are available there for direct purchase. If you'd like more information, simply email info@gmtfutures.com and we can get you started pretty much straight away. So the number, if you want to call someone and chat to someone on the phone, it's 617-336-00875. Thank you for your time. Have a fantastic day, and hopefully you got a lot out of the video, and you could see obviously the value of having automation and the value of having different strategies for different market conditions. So thank you for your time. All the best. Cheers. Thank you.